Late 2022 was a ghost town for the Solana ecosystem. The FTX collapse wiped out massive amounts of capital, pushing Solana's token price under $10 and leaving developers with very few reasons to stick around. Into that absolute silence, a completely anonymous team launched a dog coin called BONK on Christmas Day. It caught a wave of pure retail desperation. Within its first week, the token spiked over 2,000%, ultimately closing out 2023 as the best performing asset in all of crypto. But that momentum did not last. Today, the asset is trading roughly 90% below its all-time high. Yet, while retail investors have largely walked away, a publicly traded NASDAQ company recently rebranded itself entirely to BONK Holdings, publicly committing to building a $115 million BONK treasury. We are left looking at two very different realities. You have to decide if this is a dead asset catching a brief, temporary bounce, or if it has matured to a point where institutions are using the 90% discount to build serious positions. To evaluate that, we have to look at the token's origin structure. There was zero venture capital backing and no private presale for insiders. Instead, the creators took 50% of the total supply and airdropped it for free. They targeted the wallets of Solana developers, digital artists, and existing NFT holders. The stated goal was to build a community-owned asset, deliberately rejecting the exploitative tokenomics that usually concentrate meme coin wealth into a few early wallets. What started as an airdrop quickly turned into a software ecosystem. The community built a proprietary trading bot and eventually launched their own decentralized exchange to capture trading fees. They followed that up with a dedicated token launchpad called LetsBonk.fun, building out specific pathways to onboard new projects into the Solana network. This network diagram maps out the result of that utility. The token is now actively integrated into over 450 decentralized apps spanning Solana and 13 other distinct blockchains. The asset has completely bifurcated. A large portion of the market still prices it like a joke, but the actual network footprint operates like core infrastructure. That infrastructure has to support a massive amount of weight. Right now, there are 88 trillion BONK tokens circulating in the open market. This scale visualizes the tension. We have 88 trillion tokens weighing against a current market cap of roughly $480 million. That raw volume creates intense dilution. Every minor price increase triggers selling pressure from holders looking to exit their massive bags, keeping a heavy lid on the token's upside. The development team's response to this dilution is an automated burn mechanic. A portion of the fees generated by the trading bot and the decentralized exchange are used to buy tokens off the open market and permanently destroy them. The ecosystem has already successfully removed 15 trillion tokens from circulation. They have also programmed a future scarcity catalyst. The protocol is scheduled to instantly burn another 1 trillion tokens the moment the network reaches 1 million unique wallets holding the asset. The math here is highly dependent on network activity. The long-term viability of the token relies entirely on users generating enough transaction fees to continuously offset that diluted supply. Trading near a fraction of a penny, roughly $0.000055 today, the entry price looks incredibly cheap. Compare that to November 2024, when the asset peaked at $0.00000583. The sentiment right now is overwhelmingly bearish, but the technical indicators show an asset that has been aggressively oversold for months. The price is trapped below a hard resistance line at $0.000065. Breaking this red line opens the door for major upward momentum. Failing traps buyers in a long, slow period of sideways consolidation. Even if the chart breaks upward, you are exposed to a major external variable. BONK moves in near lockstep with the price of Solana and the broader sentiment around speculative internet culture coins. If the Solana network goes down or meme coin volume dries up, BONK's price will collapse, regardless of dApp integration. A single bad macroeconomic day can and will erase weeks of the project's individual ecosystem gains. The bullish case rests heavily on user adoption. The LetsBonk.fun launchpad recently managed to flip Pump.fun in daily token launches. Overtaking the established industry leader in daily launches is a massive indicator that active developers are migrating toward the BONK infrastructure. Combine that daily user momentum with BONK Holdings executing their plan to lock up $115 million in treasury by the end of 2026, and the institutional conviction is clear. But you are still buying an asset that is 90% off its peak and deeply reliant on volatile internet trends. That is the trade-off. You are taking on the extreme risk of a depreciated, highly correlated asset in exchange for a discounted entry point backed by measurable institutional accumulation. Plotting this on a standard matrix, BONK sits strictly in the high-risk, high-reward quadrant. If you have a high risk tolerance and believe the Solana ecosystem will dominate the next market cycle, this token offers direct exposure to that growth. If you cannot stomach wild double-digit daily price swings driven entirely by market sentiment, you need to look at safer